please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh. This Monday morning, I have Anuj Singhal as well with us, returning from his holiday, and of course, Surabhi Upadhyay as well. Well, just to fill you up, Anuj, we sorely missed you on Wednesday when the markets touched all-time highs, not by a whimper, but by this huge leap. So, sorely missed you there. Well, actually, today it looks...
I tell you something, Lata. I know, even I miss being in office on Wednesday, but the feeling I have is that you'll have these kind of days in October to December, and we'll talk about it. Much higher.
Actually, today as well, I wouldn't be surprised going by the kind of launch pad the Titan results and the PSU Bank gives us. One, PSU Bank results, especially in the Union Bank ones which came, tell us that the pain is ending, and Titan is telling us that consumption is picking. Yes. That's exactly the two vibes the market wanted to hear. But I just wanted to caution that there are a lot of headwinds which might perhaps spoil the mood, at least for now. Crude at $62.50 is not something that India can take very lightly. And given the political turmoil that has caused this, it perhaps may not subside very quickly. So that is going to be a serious headwind. And then, of course, this Panama-like investigation that has broken out in the papers today. The market will take solace from the fact that mention of those names does not mean that they have broken the law. The ICIJ, the International Consortium of Journalists, makes it very clear that just because names are figured, it doesn't mean that people have broken the law. And more importantly, last time around, no arrests have happened. Nawaz Sharif may have lost power and have gotten arrested, but in India, it didn't leave the stock markets any worse off. So perhaps the markets will be able to take it in a stride. And as I said, it has every reason today to be able to look at the brighter side of things, because, I mean, there's no taking away from the quality of the numbers we got.
Good morning, Lata. Absolutely. Take your point on the domestic cues and the earnings and the fact that there's resolution happening as far as, all the IBC cases are concerned. But as Lata also pointed out, let's actually pull up Asia, because Asia is not feeling good today. You had all-time closing highs again on a lot of the US indices. Those are some large cuts that you can't ignore, particularly in the Hong Kong market. No need to get panicky, but it's worth taking note of and cognizance of. And the SGX Nifty is down 0.5%. Maybe it's just a pause, but something's sort of leading to that sell-off in the Hong Kong market. For sure, crude is a concern. We'll watch out for that. And of course, let's see how the currencies react as well. But some of these global headwinds perhaps can't be simply dismissed off, at least as we start off with. Anuj, good morning. Despite that, how do you read the setup? Is it still bulls absolutely in control?
The last conversation we had was about, being positive, right? I mean, in face of what's happening. I just want to present some anecdotal data. There's two schools of thoughts. One school of thought which believes that we are in 2003 phase, at the start of a bull market, which is backed by earnings. What happened in that year? January to September, the Nifty returned 29%, and you thought, wow, what a big bull market. October to December, the market more than returned that, 32%. Now, there's other school of thought which believes that we are in 2007 kind of exuberance phase. I don't subscribe to that camp, but even if we were, even that year, October to December was a huge quarter. The same data applies. October to December is the quarter in which it's not inconceivable for market to not only return what they have done between entire January to September, but more than that. With that backdrop, January to September this year, what have we done? 20%. October to date, 6.8%. And I think now is where the key comes in, the FI buying, which is now returning. So for today, of course, the SGX Nifty is indicating downtake. Maybe it's because of Hong Kong, maybe it's because of Paradise Paper, whatever it is. And there are some short positions as well on Friday, from the F&O data. It's indicating that there were some fresh shorts. For me, the key is, do these shorts cover first thing on gap up, gap down, or do they, carry on for some more time? But the point is that, when the FI buying happens, that there are there's a technical angle in the FI versus DI buying, which is there, Surabhi. FI buying happens on market price. I mean, FIs buy regardless of what the price is on the screen. If they've decided that they want to buy, say, an L&T or an HDFC Bank or an HDFC, they just put in an order and buy as much quantity. On the other hand, DII buying normally happens at a limit price. A lot of people ask, why, despite so much institutional buying or selling, the market didn't move. The reason for that is the difference between the market price and the limit price. So when that FI buying happens, that normally takes you with momentum. And when that FI buying happens, the DIs don't need to even put in money. They just need to see the market moving up, and they only need to participate on the way down. So today could be the day when the DIs actually buy if the market is gapped down. Short point, this market I think is now poised for that big expansion of October to December, which takes Nifty to maybe conservative targets of 11,000, 11,500, maybe even more by the end of the year.
The way Mark Twain put that history repeats itself is history does not repeat itself, it rhymes. So, we don't know whether the 2003 repeat will happen. It may rhyme with 2003 more, but the valuations in 2003 were far lower than the multiples that we now see. Likewise, the mania we saw in 2007 was far greater than what we are seeing now. I mean, cats and dogs could run at that time. Now, cats and dogs run, but they are still penny stocks. So, we have to just remember that maybe we are going to have a third act, which will be neither. But I mean, I'm willing to bet on the optimistic part, especially after the set of PSU results and Titan. That finally it is showing in the micros.
Oh yes, it clearly is, and I think that's something the market is factoring in. And just one more point, the reason why normally history tends to repeat itself in market is because emotions of people are the same, and they normally act in the same way despite the past examples. You're a trader, you are sitting on a mark-to-market, you will act in a certain way, and that's why the chart formations also happen.
That's
like
why
that.
that is the basis for technical.
That's the basis for technical analysis, of course. So that's my limit. Yeah.
All right. So today it does look like the micros should trump the macros, but at the moment the SGX Nifty is not giving you that confidence.
Okay. Well, on that note, let's get some calls as we start off the week. Here's a view from a wise expert. Sakti Siva of Credit Suisse says, a common investor perception is that a key reason for this year's 34% gain in MSCI Asia ex-Japan is the sharp fall in the dollar, and a corollary of that view is that a rising dollar is a major risk to MSCI Asia ex-Japan's rally. She adds, while it is admittedly just 2 months, the 4% rally in the dollar index since the lows of September 8 was associated with further gains in MSCI Asia ex-Japan. Her 2018 year-end MSCI Asia ex-Japan target of 765 offers 10% potential upside. So good for overall Asian equities ex-Japan, but the question is how much of that money is going to come into India? There are lots of other competitors as well.
I agree, but going by the behavior of FIs last week, one can believe that the tide is turning. Let's wait and see. Let's get money market views. Pramit Brahmabhatta Veracity says it would be tough for the rupee to take out the 64.50 mark as the dollar index is getting stronger. Hence, he expects the rupee to consolidate for a while, says the trading range for the spot USD INR could be between 64.50 and 65. And of course, there is also crude that the rupee has to tackle.
Absolutely. Ajay Magnolia of Edelweiss says there are no major domestic or global triggers this week for the bond market. Yields are expected to be anchored to a narrow band till next week's inflation data release. He says the 10-year benchmark bond yield is likely to trade in a range of 6.84 to 6.89% today.
All right, over to Nigel now for the world view.
Well, all's well in the mother market, really. The Dow as well as the S&P, they're on an 8th straight session of 8th straight weekly winning streak, so that's pretty good news. The Nasdaq, on the other hand, that's up for the sixth straight week. Well, in Friday's trading session, they ended with good gains. What helped them there was Apple. That came out with its set of numbers, and that delivered a very, very strong set of numbers. The Indian markets, remember, the total market capitalization on BSE-listed stocks is a little more than 2 trillion. Guess what? Apple on on Friday's trading session came very, very close to reaching a market capitalization of $900 billion. So just keep that in mind. The other big stock that moved was Qualcomm. In fact, that moved up by close to around 10% on some acquisition talks. The jobs data as well. First Friday of the month, we always watch out for the jobs data. That did miss estimates, came in at around 260,000. The street wanted a number of more than 300,000. So that was the data point that came out of there. Shifting focus to the European markets then, there was some mild green that we saw on the screen. There, food and beverages stocks, they did very, very well, but all was not so good in the peripheral indices because we did have the Portuguese index was down more than 1%. You had the Spanish index as well that did see some selling pressure. And if you're taking a look at the emerging markets, well, there as well, was a bit of a mixed close because the Russian index ended with a cut of close to around 1%. The big headline, though, is that crude prices, they are inching higher. They're at near 2-year highs. So that's not very, very good news. And in fact, the Asian markets early this morning, the Hang Seng, that's the big underperformer. It's down more than 250 points. And what that would mean was the SGX Nifty is indicating a bit of a softer start, a 50-point downtick. Back to you.
Okay, thank you very much for that, Nigel. Well, we have to take on board what the Indian Express has reported, considering that the last time the Panama Papers did claim some prime ministers at least. The second act of the Panama Papers has broken out in newspapers the world over. The Indian Express reports that a German newspaper has obtained about 13.4 million documents of two firms, Bermuda Appleby and Singapore Asia City, which deal for clients with 19 tax havens across the world. The Indian companies whose documents figure in this tranche of papers, called the Paradise Papers, include Aircel, GMR Group, Jindal Steel, Havells, Apollo Tyres, Hindujas, MRMGF, Videocon, DS Construction, and the Hiranandani Group. Bermuda Appleby is a 119-year-old company and a leading member of the global network of lawyers, accountants, bankers, and other operatives who set up offshore companies and manage bank accounts for clients to do the following: avoid or evade taxes, manage real estate assets, open escrow accounts, purchase airplanes and yachts, paying low tax rates, or simply use offshore vehicles to move millions across the globe.
Okay, so now the papers are being investigated by the International Consortium of Investigative Journalists, whose Indian member is the newspaper, that's Indian Express. Express has stated that it has been investigating these papers for 10 months now and will file details of its investigation over the next 40 days. The ICIJ published the following disclaimer with regard to data provided. There are legitimate uses for offshore companies, foundations and trusts. We do not intend to suggest or imply that any persons, companies or other entities included in the list have broken the law or otherwise acted improperly. Okay, so let's see. There are questions being raised, but as the disclaimer points out,
you can't forget that one prime minister got arrested and lost his job in Pakistan. So, you know, you have to keep that also on board.
Yeah, let's see. I mean, it obviously widens up the ambit of investigation and, you know, how law enforcement...
This is anti-black money week as well. So the government might take it up very seriously.
Absolutely. On that note, let's take a quick break. We'll come back on the other side with the CNBC Tv18 list of top 10 stocks for Monday morning. Okay, so like we've been telling you, the SGX Nifty is still down about 54 odd points. There's a bit of pressure on Asia. But having said that, let's now get down to the macros and talk about a lot of those stocks that will be on our radar today. Here's the CNBC TV18 list of the top 10 stocks for the morning. Good morning and happy Monday to all of you guys. Anuj, let me start with you. What's first up on your mind?
So the stock that broke out literally is BHEL, and it's a stock which is breaking out of 2-year consolidation, economy-facing stock, and in fact, ever since that PSU recap, remember we've been talking about focusing on these economy-facing stocks. On Friday there was massive delivery buying of 1.6 crore shares, 56%, which is very unusual for BHEL. So the FI buying could be returning in some of these stocks. The other is NCC. I know we'll talk about this NHAI issue. HCC's pain could be in NCC's gains, and a couple of other ones which are stronger. So the stock, the only caveat is the stock has had a big rally and is trading above its moving averages, the key moving averages. So just keep an eye on that. And the other interesting stock, which I saw on my on the back page of the stocks where you saw big jump in delivery volumes, is AdLabs, and it's a stock which has bounced back from 200-day moving average. In fact, I think on Friday it had 10% surge in last hour and big jump in delivery volume. So that will be an interesting stock to watch out for.
Okay, we'll keep that on our radar, of course. But I think the stock of the morning and the stock which perhaps redefines the earnings season itself is Titan. Tell us, Naveen, what impressed you?
So strong performance across all parameters, Lata. I'll begin with revenue, 29% jump. The highest expectation on the street for revenue jump was maximum was 22%. So clear beat on that parameter. Margins have also come in at a multi-quarter high. I was checking 12, 15 quarters, haven't touched 11.5%. 11.5% in this quarter versus an expectation of 10.5%. So over there also. What led to this increase in both revenue and margin? Jewelry, only jewelry. Jewelry growth was 37%, which led to the revenue jump. On the other hand, the margins in jewelry was also at a multi-quarter high at 14%. Remember, we spoke to the manager during the management con call. The management clearly alluded to the fact that the jewelry sales were more into the wedding scheme. Okay. So that is one reason why the margins have improved. On the other hand, on the back of this, most of the brokerages have a positive rating. Morgan Stanley is overweight with a target price of 920. Macquarie has a target price of 907 with an outperform rating. Remember, the stock is not cheap. Trades at 43 times. The stock has jumped 120% in the last 1 year from Demon. But still, the kind of numbers that it's posting, it's clearly proving its worth.
What are the valuations now?
43 times FY19 consensus multiple.
Oof. 43 times.
Because considering all the FMCG companies also go at similar valuations, maybe.
Anyways, well, let's get to
Amazon's valuations.
No,
I think this is globally you've seen this kind of
yesterday we saw Apple's market cap. $900 billion is 1/3 of India's GDP.
Exactly. Yeah.
I mean, what are we talking about? Okay, Ekta, Torrent Unichem, how should the markets interpret now?
Well, for Torrent, the consensus is that it was a good deal. So 3,600 crores equals to 4.2 times FY17 Unichem's domestic sales. That's largely in line with expectations in terms of the deal. Plus, they are going to now become the 5th largest domestic player in the domestic market. So that's another positive. Market share is going to go up to 3.4% versus 2.5% for Torrent at this point in time. The interest costs are going to rise, and that's going to be the near-term sort of overhang for Torrent. But based on the fact that they integrated Elder in the past successfully, the street is very optimistic about this deal for Torrent. On Unichem's side, I expect the stock to be in the red because we did speak to Dr. Modi on Friday evening, and he very clearly mentioned that he is absolutely not selling the international business. Around 50% of the funds should go back into investing into the international business, which is currently in their portfolio post this deal. And 50% should be paid back to shareholders. Now, the only worry is that the international business is not that great in terms of a performance for Unichem. They've always been an overhang because you're entering the international space when there are so many headwinds at this point in time.
All right. Thanks, Ekta, very much for that. And also, belated birthday greetings. Hope you had a great one and wish you a fantastic year ahead. Well, with that, let's move to the banks. And Abhishek is here as always. Abhishek, first, let's start with the good one. Union Bank, hope floats?
Union Bank, the balance sheet actually improved. So if you look at the slippages have declined by 40% on a sequential basis. That led to gross NPA improving by 28 basis points to 12.35%. The annualized slippage ratio is one of the lowest in last 8 quarters, while the balance sheet growth or the loan growth is the best in last 8 quarters. Brokerages seem positive on it. CLSA has increased the target price to 210 from 160 earlier. They have also mentioned the same thing, that slippages are moderating, which is encouraging, and asset quality is stabilizing. On the flip side, provisions remained elevated owing to their exposure to NCLT and IBC cases. Therefore, they had a net loss of 1,531 crore. Back to you.
Abhishek, thanks a lot for that. I think the important point is 5th largest bank are also showing lower NPLs, and that could do what PNB did to the market and earlier Syndicate did to the market. So that's a very important story. Could be our big story today. Anisha, the infrastructure companies will reel under what NHAI has done?
Well, yes, some of these companies might reel under pressure, but on the flip side, the other ones that are not named may just move ahead in trade. In terms of the names that I mentioned, the likes of L&T, HCC, Ashoka, Supreme, MBL, yes, they'll see a sharp downtick, but my sense is that they will recover intraday because remember, this is an ongoing development. The NHAI has not barred the companies as of now. They have given the notice to these companies to make representations till today, and the final order will be out only tomorrow. So yes, a bit of downtick coming because the question remains of then who will bid for all these Bharatmala projects that are coming in? Bank of America has written on it, and they say that even if L&T is barred from this, it will impact the order inflows by for FY18 by just 5%, and the price target will also just move 4 to 5% lower. So not a big, knock coming as far as L&T is concerned, but for the other smaller names, yes, we will see a sharp downtick.
Okay, all right. Thanks, Anisha, so much for that. In fact, let's get some more details going on that story. It actually broke on Friday after market hours. Ashpreet is here. Ashpreet, today is the last day for companies to make their representations to the NHAI, right? So what is the current stance? I mean, these projects, they stand cancelled as of now. Is there a penalty? I mean, what's the current status quo?
Well, as we had reported on Friday, the notice clearly says that it stands as of now the 20 projects have been terminated and all these companies have been barred. It's just that the notice has been given out as to why they have to make representations today and explain to the NHI as to why they should not be barred and why the notice should be withdrawn. So the notice is clear that all these companies are barred. We'll have to wait and see what happens today. Once the representations are made, the final call will be taken by the NHAI board tomorrow at a meeting which will be held. And today, all these companies are likely to meet, even the Road and Transport Minister, Nitin Gadkari, and they're going to make representations on the same issue. Back to you.
So do they just make presentations? I mean, is it very clear that tomorrow the verdict will be out? Or just tomorrow the deadline for representation ends and the NHAI could take its time to make up its mind? Ashpreet.
Well, sources tell us at this point of time, and the notice is also clear as far as representations are concerned, that today is the last day to make representations, and sources tell us that tomorrow NHAI board will sit and deliberate on it. So maybe the final verdict is tomorrow within this week.
Sure. Okay, fair point. Thanks, Ashpreet, for that. Well, let's address some more numbers then. Mangalam, VRL Logistics.
Good numbers, Anuj, as far as VRL Logistics operational performance is concerned. While the revenues were flat, we saw a flare-up on the EBITDA. The margins improved by about 100 basis points, and the net profit on a low base increased by about 55%. So that's decent growth coming in that would keep the stock elevated. But remember, the company also announced a buyback of close to around 42 crore rupees. That may keep the sentiment upbeat. But remember, this is a market buyback, so wouldn't pay much heed to the price as well as the open of the kind of acceptance ratio that will come in. It is a market buyback, so we'll keep an eye out on that. But what will keep the stock excited is the fact that they enjoy valuation support. 26 times for a 12% margin company. Compare that to all the other logistic companies, it sees some bit of headroom, especially in light of the Mahindra Logistics IPO, which is open with a 3% margin and 31 times valuation. So we'll keep an eye out on that.
Fair point. Thank you very much for that, Mangalam. Yes, I think probably for shooting their mouth once, VRL Logistics has not got the valuations that other logistics companies have had. But Ronit brings us good tidings. A lot of good results, Ronit.
Yes, Lata. So I'm going to start with Kitex Garments. Good set of numbers coming in. Revenue was up 40% as well as the EBITDA was up 37%. Margin slight downtick largely due to rise in cotton price, but the PAT was up 85% largely because the base quarter depressed effect. Moving on to Zenza Tech, strong results coming in from the mid-cap IT company. Revenue slight uptick, but the margins came out 150 basis points higher at 11.6, and the profit after tax was up also 33%. Finally, moving on to Andhra Petro, turnaround results coming in. Revenue was up 28% quarter on quarter, as well as the EBITDA was up 130%. And finally, the margins came in around 870 bips higher.
Okay, all right, Rana, thanks very much for that. So those are the good. But along with the good, there are always a couple that are not so pretty. And we have a couple of them. Sonal is rounding up that list. I think Shipping Corporation is topping your chart, Sonal.
Absolutely. I'm sorry. I expect all these stocks to be in red today. Shipping Corporation, we have seen that the stock has run up quite a bit in last year, but that did not show in the numbers. Revenues were up 7%, but the margins took a downtick of around 230 basis points, and the loss widened at 76 crores. Going to Kirloskar Ferris, higher costs are the main reason why the margins are dented. The revenue was up 23%, but the margins were down 670 basis points, leading to a PAT decline of around 52%. Sickle Logistics, on a sequential basis, though the revenue was flat at around 247 crores, the margins were down 290 basis points, leading to a profit decline of around 33%. Inox Wind, a howler set again. The revenue was at 79 crores and the loss was at 70 crores versus 74 crore of profits. Also sequentially, it has actually deteriorated its performance. UCO Bank, Abhishek tells me it's 8th consecutive quarter of net loss, and the NII is at 655 crores, which is down 47% on an yearly basis. Godrej Agrovet, post-IPO blues. The animal feed businesses, which actually disappointed the revenue and margins. Though the revenue was flat at 1,400 crores, the PAT came up at 4% and the EBITDA was down 6%. Back to you.
Okay, all right, Sonal. Thank you so much for that. So, well, on that note, let's quickly recap our list of stocks this morning. Stocks expected to gain because of result or positive news flow include Titan, BHEL, NCC, Ad Labs, Union Bank, Torrent Pharma, VRL Logistics, Kitex Garments, Zenza Tech and Andhra Petro. Stocks that could see some pressure this morning are L&T, HCC, Ashoka Buildcon, Supreme Infra, MBL Infra, Shipping Corporation of India, Kirloskar Ferris, Sika Logistics, Inox Wind and UCO Bank. So that's the list. Almost 50-50 this morning, Lata.
Oh yes, but let's get to results analysis. BEL has posted an extremely strong set of numbers this quarter. Is this performance sustainable? Mr. M.V. Gautama, Chairman and Managing Director of BEL, joins us on the phone line with his outlook. Good morning, Mr. Gautama. Thanks much. Well, that really is the first question. I mean, how sustainable is this pace of growth? Can we see it in the second half?
Good morning, madam. The performance of Bharat Electronics over the 4 quarters that we see, we have ensured proper planning and even flow of our deliveries. So compared to last year Q1, Q2, this year we were able to do strongly. However, towards the end of the year, as we declared earlier, we will have certainly a double-digit growth, maybe around 15%.
Okay, so for 38% is more, revenue is more a one-off, you think, in terms of low base or something? The overall yearly run rate would be 15% for revenues?
Yeah, around that, yes.
Okay, and
last
what about...
year we had more than 15%. This year also we are aiming for much higher than 15%.
But more important is the EBITDA, sir. I mean, one can take revenues in the stride, but if you can report an EBITDA, anything like this, you know, 600 crores, could that be the quarterly run rate?
It will come down little lower towards the end, and we will be stabilizing. If you have seen our performance last 2 years also, it is not going to vary much. We will be, you know, around 20% type of figures.
20% EBITDA growth. Right, sir. If we could get some idea about the order inflow target, because Q2 has been even better than Q1. So what is your guidance? Are you retaining your guidance? Last time you told us, I think 13,000 to 15,000 crores for FY18, or could it be even better?
No, we are retaining the same figure of 13 to 15,000 crores. As of now, we have got other orders what we expected other than the big ticket programs. The big ticket programs are still under contract negotiation. One is Akash 7 squadrons, another is LR SAM for P-17 class ships.
When do they get finalized, you said?
For me, Akash should have been finalized in Q1. We missed Q1. It should have been in Q2. We missed Q2. Okay. Now I am only hoping that we will certainly try to do it by Q3.
And LR SAM?
LR SAM, the negotiations started just now, and I certainly expect it before end of the financial year.
Mr. Gautama, we also got this news report just a couple of weeks back about, you know, the Indian Army looking at a complete overhaul, a full modernization, weapons modernization program, and some big numbers were thrown about how much could be spent over the next couple of years. Is that too distant, too far into the, you know, down the future, or do you see some of that benefiting BEL in the near future?
Certainly, any upgrade program of Indian Army is beneficial to Bharat Electronics because most of the weapons do have electronic systems as component of them. And we are also looking forward for initiation from Army side. All the weapons, what they are looking for, we have got the counter-matching electronic systems already developed, qualified and ready for delivery.
Okay. Okay, so it does look like it's going to be a stronger second half as well. Mr. Gautama, pleasure speaking with you, sir. Thank you very much for joining us with those details of your numbers. So yes, it was a sparkling quarter for BEL, but for the full year as well, 15% revenue, 20% EBITDA, I think is something the street will be extremely happy about. Quick break. Our technical experts, Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar are joining us in a jiffy.